Welcome to Markets in Vitro. In this video, we take a data-driven look at the markets using quantitative models, macro analysis and proprietary indicators to better understand risk, liquidity and market direction. If you enjoy professional market analysis, consider subscribing. But now, let's dive into the charts. First of all, let's have a look at our most important indicator, which is the smart money tracker. As you can see on a daily basis, a couple of weeks ago it switched from red to green. That was when Donald Trump declared the end of the Iran war. We saw a massive accumulation leading to this new accumulation line and a bullish impulse. Thereafter it switched to green and stayed green throughout this whole epic rally until the beginning of last week, where it switched to red. However, the markets bought up the bottom and made a new all-time high with another bullish impulse and an accumulation. That was on Thursday. On Friday, that was completely sold off, yielding to another bearish impulse and setting an end to this bullish market structure. So we have entered now a correction phase, probably choppy markets leading to a sideways action or even a larger correction that could go as far as one of the daily moving averages or all the way down to the 7,000 level or 700 in the SPY. Most likely this bullish pattern here, this bullish impulse that led to a new all-time high and the sell-off thereafter, this is very indicative for liquidity hunt, just to get rid of all the long position that had been opened down there. And yeah, that's how it is. Now, do we have more indications of this weakness and possible pullback? And the answer is yes. Actually, our market weather forecast switched to red, and the chances for a pullback on Monday and Tuesday are pretty high, around 46%. Very likely that the markets will recover afterwards, but the more we go into the future, the higher the uncertainty is. The other thing I want to mention is that the VIX, short-term VIX, is indicating a small breakout after it has been green for a while. This is our risk indicator, which is at a very low level currently. However, the VIX is picking up. For now, only a short-term event. Let's see what happens during the weekend if we see a new spark of war in Iran or whatever that is. And the next thing I want to bring to your attention is, of course, the sector rotation, which is extremely defensive. So the leading sectors, technology has lost it all. It switched to a bearish trend, and the leaders are now completely defensive: energy, staples and healthcare. And we see that in our strength chart very nicely. So tech is turning lower, whereas healthcare, staples and energy is picking up. So these are not the sectors that a healthy bull market is driven by. This is a typical market pattern towards the end of a bull phase. The other point, which is very interesting, are the ETF flows into short ETFs. There are so many ETFs, oh my god. So, leveraged ETFs. The triple Q Pro Shares Ultra has seen a massive outflow of the short semiconductor outflow. Oh no, it's the semiconductor bull, 3 times leveraged outflow. And if we see the inflows, they go into inverse ETFs, short Qs, short SOX, and so on. So that's a major shift after this epic semiconductor rally. Very interesting also the latest COT report, which shows that the large traders and institutions, they are all long in the major indices. So when everybody's long, nobody can buy into it, they can only sell. And this was on Tuesday this week. So could have been that this is already going to be resolved. So when everybody's long, it's likely that they start selling at some point. And actually, we detected the distribution for the Nasdaq. The S&P is still in a bullish trend. However, Russell and the Dow already entered the bear phase. Well, even the other markets don't look too good. The bonds are heavily shorted, I have to say, and they show very nice short patterns, indicating that yields could spark even higher. And yields are basically the main problem for this current market, as we mentioned in our insight over here. So especially on the long term, the 30-year bonds, they have entered the 5% regime and they closed well above it. And they are even in an uptrend. So yields are not going down. And with inflation picking up, the Fed narrative has also changed. So it's probably going to be higher for longer. That will not bring yields down. Even the short-term yields, we are here above 4.5 on the 10-year and above 4 for the 2 years. So that's pretty high. And 5% yield is poison for growth stocks, which rely on cheap money. But money is not cheap. The debt in the US is exploding. And when it comes to liquidity, we can see that most of the Fed-generated liquidity is diverted to the TGA, the account of the government. And this liquidity, which is used to buy up short-term bonds, is no longer there to flow into stock market assets. So that's basically missing. Even the external flows, they are very low due to the weak dollar and the lack of trust into the US. And that's bothering market, and they finally started to price that in, actually. And when it comes to money flows, we noticed also hefty dark pool volumes yesterday in some very suspicious ETFs. For example, the 11th largest trade in the short semiconductor ETF, the SOX. Right here at the bottom, 268 millions. But there are more. There's some in the SPY at the top. We had one at the bottom over here, so it's very likely that somebody bought in just before the epic rally started, and a smaller one over there. So somebody suspects that the rally is over. Another one in energy, but energy is not very indicative. This is bought up continuously in the Qs. This one is suspicious, also at the top, quite large. Well guys, if you liked today's video, please leave a comment or hit that like button and subscribe bell. However, drop onto our page, which offers a lot of information you might find useful. Check out our wonderful stock screener that allows you to compare all the stocks among peers, ranked by sector strength and industry strength. Filter patterns directly. Find your favorite patterns in the strongest sectors. Find setups with high winning percentages, and check everything out in our analysis chart that offers many features which you might find useful. Shows you the pattern probabilities, and there's a lot of stuff you can overlay here. The seasonals, putting call ratio. Check the outperformance of the stock versus the indicator, versus the index, sorry, or versus the sector. Check out its earning statistics and trade the patterns. There you go. Have fun, have a good weekend, and good luck in trading.